Purchasing a home can be a daunting experience, but it doesn't have to be. Many times, the fear comes from the unknown, and the unknown is, well, what's my lender going to ask of me? What do they need from me? And why do they need it? Today's episode is geared specifically to answer those questions. Just what does your lender need from you? Ladies and gentlemen, boys and girls, children 18 plus. You are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC
John Coleman.
Yo, what's poppin'?
Another day, another dollar.
It's our third episode back to back to back.
Back to back to back. Yes, we are recording this, full disclosure. We are recording this on a Tuesday, July the 2nd, but it's going to drop probably a week or 2 weeks after, which is abnormal for you and I.
Yeah.
Like, this is episode 400 and something.
452.
Yep. If you want to go watch them all, head over to YouTube. It's the TLOP channel, the Loan Officer Podcast. Just type in the Loan Officer Podcast in YouTube. Subscribe, and you can see all 400 plus episodes. And when we do these episodes, we typically record them and drop them within days, if not the same day. However, once or twice a year, I like to get away, and you like to get away. And we take our significant others and our families on these trips, and we make memories together. And you and I are going to be doing that because it's July, and that's what people do in the summertime. So we had to work a little bit ahead. But I love today's episode because it is geared specifically for the consumer.
Yeah.
And I love making content for the consumer because A, it's a much larger audience than making content for mortgage loan originators.
Yeah.
But it's also content that mortgage loan originators can actually use in their day-to-day marketing, advice giving, selling. It's information that real estate agents can also curate and pass along, learn from, share. And it's information that parents with adult children could tune in and be like, wait a minute, this was too good. Let me make sure that, little Kathy, and by little Kathy, she ain't that little because she's 24 years old.
47 living
She's
in the
47
basement,
living in the basement.
Yeah.
But let's make sure she can tune in because overall, what's the premise of this show, John? When you and I got together 4 years ago.
They don't teach in school.
It's the shit they didn't teach in school. We are kind of like, what if Dave Ramsey and Joe Rogan had a baby? Right? That would be TLOP. That's what you're tuned into. If you're a first-time listener, thank you so much. If you dig this, make sure you share it. And if you're tuning in for the 400th time, you're OG.
Well, if they're just tuning in for the first time, Dustin, don't shit the bed or drop the ball.
I'll try not to. My purpose in life is not to suck. That is like when I'm speaking on stage and someone's like, hey, good luck. I would rather them say to me, hey, don't suck today, because that's my goal. I want to stand up there for 30 minutes or an hour or however long that they gave me.
Right.
And my job is to not suck. Now, ultimately, we want to entertain. We want to educate. We're not going to motivate. No, but we may want to inspire and inspire change. But ultimately, we're here to educate and we're here to motivate.
I'm going to inspire a lot of people to renew their lease because after they talk about all the hoops you got to jump through to get pre-approved for this loan, living in an apartment complex sounds pretty enticing right now.
Does it, John? Does it? But, let me ask you this.
Yeah.
Does generating 70 times more wealth because you bought a home, is that worth maybe a couple hours of paperwork to you?
Yeah, because if my fridge goes out, I just call the maintenance man.
300 racks, John. $300,000, right? The difference between a homeowner and a non-homeowner. Like, that's real tangible money. Damn. Come on now. Let's not be short-sighted. All right? No pain, no gain. But the goal is to make it less painful. Any good lender out there makes the process as smooth as possible. But so many times the consumer's like, I just don't know where to start. Well, I would tell the consumer the same thing I would tell someone starting their own business.
Okay.
Or a 100% commission salesperson who's like, I just don't know where to start. I said, well, the worst action is inaction. Okay. The worst action is inaction. There's times and places to pause. Like, there's times and places to take it in. But most times that's not it, right? That's the 20%. The 80% is you take action. So the first thing you do is you get started. Put one foot in front of the other, pick up the phone and call somebody. That's a great first step, right? Or tune into a show like this or go to our YouTube channel
Yeah.
and watch. We have an entire playlist curated for home buyers. It's called the Home Buyer Playlist. It's pretty simple. You could go and like tune into that. Would be a great place to get started. But if you want to purchase real estate, the first thing you need to do is you need to reach out to a lender, not a realtor, not a realtor. Look, realtors do the fun. They do the sexy. They show you properties. They let you tour homes. They help you envision raising your family in this community and where are you going to put your couch and where do you think you'll put your big screen TV? Like all of those things. That's sexy. But the finance, right? That is the most important. Do you qualify? How much do you qualify for? There's a difference between the right loan and just a loan you qualify for. Yeah, you can qualify for a loan, but what if that loan is not the right loan? Because see, a good lender is going to tailor make financing to help you, John Coleman, match and meet your financial needs, wants, and goals. You might not even know what your financial needs, wants, and goals are. So a good mortgage sales professional, good mortgage broker, MLO, loan officer, whatever you want to call them, they're all the same. A good one of them, they're advisors first. So the first step, pick up the damn phone and call somebody. If you don't know who to call, maybe you check with family and friends. Maybe if you're already connected with a realtor, check with your realtor. They tend to know some of the best professionals, and not because they're greasing the palms. That shit's illegal. Actually, there's a thing called Section 8 of RESPA. Section 8 of RESPA makes a payment for referral illegal, but realtors know great lenders because realtors only get paid when homes sell. Well, if a lender screws up financing, a realtor won't get paid. And realtors also understand the importance of having a good lender who's accountable and easy to access to make sure that the transaction goes smoothly. Because if you don't close on time, you could lose the house. If you don't close on time, you could have to pay penalties to the seller. Like, it's a big, ugly, nasty thing to not close on time. So if you don't know who to call, check with your friends, check with your family, get a recommendation from your realtor. Maybe do a Google search and look for Google reviews. Maybe go to YouTube and see who's putting together some awesome content, or maybe you follow someone on TikTok, on Instagram. I don't know. But I want to talk today about just typically what types of questions lenders are going to ask you. But I want to answer why and also give some advice from a lender, advice to the consumer on how to look and think of us. Okay?
Good.
Any particular way that you think we should start this, John?
Unprepared, like we do for every episode, Dustin.
Okay, but like, if should I go into why they're asking it, what they're going to ask, or just let's set the stage on understanding who the lender is in this relationship?
I think number one, the first question. So I found someone, you, and I'm ready to.
You found me?
Yeah, I think
Yeah, you found the needle in the haystack.
Yeah.
You knocked it out of the park, John. Way to go.
It. And I called you, but you were busy because you helped so many other first-time home buyers. But now,
you know what? I help all home buyers.
That's what I know, but so many first-time ones.
Yeah, I coach and teach loan officers to stop doing first-time home buyer seminars. Let's just do home buying seminars.
That's why you're the greatest.
Because as a mortgage lender, I help you buy your first house, your 10th house. I help you buy your first investment property, your 20th investment property, that beach condo, that lake house, that Airbnb, that short-term rental. Like, I will literally help you buy any type of residential property. So if I'm going to go out and teach a class, I might as well teach a home buying class, not just limit myself to first-time home buyers that make up, honestly, only 50% of the transactions are first-time home buyer transactions. The other 50% are all those other things that I talked about. So sorry,
I did not mean to chap your ass there.
You triggered me.
Chappy ass.
You triggered me there, John.
God, okay.
So anyhow,
All right,
ask your question.
Okay, I get you on the phone, ring, Dustin. Hey, it's Dustin. I'm calling you back, John. Good to hear from you. So like, hey, I want to buy a house. I found a property. What do I do?
Okay, so the very first thing a good lender is going to ask you is this your first time going through the home buying process? They should want to know that, because I need to know what speed am I going to take this conversation. If you're like, oh no, I've purchased three homes, I would say, when was the last time you purchased a home? If you said I purchased a home 2 years ago, I can take this conversation, this process at a 2x speed as compared to if you said, I've never gone through the home buying process. If you told me, I've never purchased a home, but I was pre-approved last year, I can take you at a different speed than a person who's like, I've never done this before. I'm shaking in my boots. So I think a really good lender, the very first question they should ask you is literally, is this your first time going through this process? Because I want to get that out on the table. That's going to let me know how to take our conversation. Okay. The second thing they should ask you Time frame. Hey, out of curiosity, do you have a certain time frame that you're trying to work under? This is going to tell me, as basic as it sounds, so many lenders don't do this. Time frame is going to tell me at how much urgency do I need to act. Are you that client that I need to make sure you have my cell phone number so you can text me Sunday at 2:00 because you're probably making an offer and you need me to run you numbers? Or are you somebody that literally just re-signed your lease? You need to wait for next year's income tax refund check to come in before you're able to buy, at which point I can spend a little bit of time with you today. I can maybe send you a bunch of information and content to consume, and we can plan to talk later. And by later, I'm thinking like, I don't know, December,
right.
But I don't need to drop what I'm doing and spend 2 or 3 hours with you. But I'm obviously grateful to have you referred to me, and I want to make sure I get you pointed in the right direction, but also that I don't waste your time and my time. So that would be the second question. Now, those are probably not the two questions you thought I was going to answer.
100%
right?
we're not.
Yeah. Yep. So I totally just took you like and turned you around once or twice. If I turned you around twice,
that's a do-si-do.
That's a do-si-do. All right. So now that we've do-si-doed, now we can go ahead and say to the answer you're probably angling for, because you're always angling, John. I know you.
That was good, though.
I know you. I think the most important thing that you should figure out is what is someone's comfort payment. What is your comfort payment? Now, I'm not talking about this like in the car industry. The car industry does that in a kind of sometimes way that can be a little bit icky. Like, oh, well, if your payment's fine, what does it matter how much you're spending on this car? I'm like, no. I'm not talking about what's your comfort payment because I'm going to make you go buy a house that is out of your budget. No, I'm asking you this because I don't care what size house you buy. I don't care if it's a condo or a townhome. Like, I really don't. I'm your lender. I'm your advocate, right? I am here just like your attorney would be your advocate. Like, the underwriter is the judge, right? The underwriter is ultimately the guy or the girl with the gavel that's going to rule in our favor to whether or not your financing gets approved. My job is to be your attorney. I represent you. We have a certain attorney-client privilege going on, and I'm operating in your best interest. Okay, I think a lot of times consumers, home buyers, borrowers, they want to withhold information from their lender. Oh, I don't want to tell them this. I'm like, no, I can't do my job if you're holding information from me. I can structure your loan in a compliant way that's going to make sure that you qualify, but I can't do so if there's going to be right hooks coming out of my blind side, and we're not covering our flank, and we have foul balls hitting us in the face, all because you weren't disclosing all the information. I need all the information. From there, I'll figure out which of the information are we going to use to get your loan approved, and which of the information isn't really relevant, right? There's very few things as a loan officer I can't unsee or unhear. There are some things. There are definitely some things that I can't unsee and unhear. If it's like pure fraud, okay, I'm going to turn your ass in, okay? I'm not going to lie. My career, my livelihood, me providing for my family is worth way more than one commission check is. But ultimately, if you have a certain bank account that I'm like, look, thanks for disclosing that bank account to me, but you have a ton of deposits going in there that are going to make the underwriter nervous, and we're going to have a difficult time to source it because maybe you're out doing a bunch of side hustle work that doesn't show up on your tax returns, or maybe you're out degenerately gambling on the casino boat, and you're not claiming those wins, but the deposits are in there because you're crushing a blackjack, whatever the case may be. I want to know about that so I can be like, hey, let's avoid using that bank statement to get you qualified. Like, those are the types of things a good loan officer is going to be looking for. So you as a consumer, the last thing you ever want to do is not divulge everything. So my first question to you as a lender, once I get past the two setting the tone questions, I guess it makes it my third question, is going to be, hey, John, what's your comfort monthly payment? And before you answer it, because I won't give you time to answer it on purpose, I'll say I asked this question, John, because 9 times out of 10, I can qualify most home buyers for more home than they want to afford. So I would rather not talk about how much you qualify for, because if what you qualify for is going to make you house poor, or if it's going to put financial strain on your household, which means your marriage, which means your stress level, like, we don't want to go there. We don't want anyone being house poor. So I'm going to ask you, what's your comfort monthly payment? Because my job is to marry that payment to a sales price and to see if we can make a happy marriage. And based on things like your down payment, as well, because that's going to come into play into how I structure your loan, how much or how little money you have to put down, or whether or not we're using a VA loan because maybe you're active duty military, or you're a qualified veteran, or maybe you're not, so I can't use a VA home loan. Like, I just need to know what's your comfort monthly payment, and that's my reason for asking. And when I say comfort monthly payment, I'm all in, the whole kit and caboodle. So that's principal and interest on the note, that's real estate taxes, that's homeowners insurance, and a lot of times it's mortgage insurance, and it could even be either condo dues or homeowners association dues. So when you sit down and you do your budget, how much is it that you are looking to pay for on a monthly basis? Like, so that's, to me, once I've gotten past, is it your first time going through the process, or how many times have you gone through the process? Once I've, asked you your time frame, I want to start with that payment, because from there we can back into, does it make sense? Now, there's a lot of times people have champagne taste and a beer budget.
That's me.
And there's a lot of times in most markets right now, it's freaking hard. If you're not dual income in many markets, or you're not a 6-figure earner and you're not dual income, homeownership is not really attainable. It just isn't. Home prices have gone up. Interest rates are up. The cost of insurance is up. Like, I get it. And it's just unfortunate. But because of that, I will say, what's your comfort monthly payment? And if someone says, well, I can pay $1,500 a month, and I say, okay, well, how much are you going to put down? And they're like, well, I have like $5,000 to put down. I need to let them know that in some markets, $1,500 a month, well, heck, taxes, insurance, and mortgage insurance is going to be $600 a month. That only leaves us with $900 to play with when it comes to principal and interest. And $900 may be a $150,000 loan. At which point they're like, I can't find a house in my market for less than $330,000. I'm like, I know. Like, that's the unfortunate thing. You need to go buy a house with somebody else so we can take that budget up, because now there's more people paying for it. And not everyone can do that, because not everyone is in a committed relationship with another person, whether it's a sibling, whether it's a cousin, whether it's a best friend, or a boyfriend or girlfriend. Not everyone is in that type of committed relationship, but that's what it takes to purchase real estate. So I want to know that comfort monthly payment. Like, I'm just going to ask that up front. I also want to know, how much money do you have? This would be the fourth question. How much money do you have allocated? That's a big word for some people. Or set aside. How much money do you have allocated to go towards this transaction?
I have $30,000 in my savings account.
Okay. John, that's fantastic. You have $30,000 in your savings account. How much of that $30,000 are you looking to spend? That's what I mean by allocated. Now, how much money do you have? Because you may have $100,000, but in the back of your mind, you're like, yeah, but I need $50,000 for this big investment I'm going to make in January. And I need $25,000 because my baby mom is hitting me up for some more child support. And we've been fighting for two years. True stories. This happens in life. We've been fighting for 2 years, and I have a feeling if I lose, I'm going to owe her 2 years worth of back child support for the difference between what I was paying and what the judge is going to tell me I now owe. So that in that case, you may have 100, but you're only allocating $25,000. So I would say to you, is that $30,000 what you have allocated, or is that all the money you have?
Oh, that's all the money I have.
Cool. Well, so let me teach you a thing about having reserve assets and the importance of it. Ideally, you should keep at least $10,000 at all times in some kind of a savings or money market account. So in my perfect world for you, John, as your lender, I would try to see how we could help you purchase real estate with only using 20 of that 30,000, because I don't want to be that guy or girl who leaves you with no money in the bank. And now that you're a homeowner, because owning a home, although it's a great investment long-term, there's definitely some maintenance aspects that you have to be aware of. And it's never good to go through life not having some kind of an emergency fund. Right? So like, we would have that type of conversation. Now, when you told me 30,000, and this is where probably whatever hook or whatever title that you and your AI widget use to get this thing posted on Spotify, Apple, and up on the YouTube channel, like I teased it a little bit. I am, as your lender, going to want to know, hey, John, how long has that $30,000 been in your bank account? I want to know that. And the reason why you're thinking, damn, this dude's like...
Yeah, all up in my shit, man.
Correct. Yeah. No, here's what I know. My job is to know underwriting rules, regulations, and guidelines. I know that these underwriting rules that are presented to us by our regulators, by the GSEs, the government-sponsored entities that make home loans possible. That's Fannie Mae, that's Freddie Mac, that's HUD, that's Department of Veteran Affairs, that's United States Department of Agriculture. Like, we have to adhere to their rules and regulations. And if you have a large deposit in your bank account that we can't source, they're not going to let us use that money to help you qualify. Right? So if you went out and did weird, nefarious things to raise that money, we're going to have to season that money. Now, season, it means it just has to sit in your bank account for 60 days. So that way, when I ask for your past 2 months of bank statements, by the time I get 2 months of bank statements, that large deposit doesn't show up.
Throw some Lowry's on that.
Okay. Sure. What are Lowry's?
Lowry's seasoning salt.
Okay.
Let it season.
Let it season. Boom.
God.
I thought I was the guy with the dad jokes, not you.
But,
You're the guy who hates kids.
I know, but
I wouldn't expect a dad joke to come from you.
I wasn't daddish. That was like Uncle 3 beers in.
Oh, was that? Okay.
That's what
what do you call that? 3 beer unk?
Yeah,
that was a 3 beer unk. Okay.
Okay.
Throw some Lowry's on it. Let it season. All right, I got that. I'm going to start using that going forward now.
You're welcome.
Yeah, you're welcome. Thank you. But yes, like we have to know that if you went and did a credit card advance, I know, because it's my job to know as a lender, I cannot use people who borrowed money against a credit card for their funds to close. Right now, if it was a gift from your dad, we can use a gift from your dad, but I need your dad to fill out a gift letter and sign it. Right. So like, I need to know those things. I'm not doing so because I'm snooping into your business and I'm nosy. No, I'm doing it because my job is to make sure you not only qualify for a home loan, but that it actually closes and you get the right home loan for your financial needs, wants, and goals. So that would be a scenario where I'm like, hey, I am your advocate. Like, I'm your attorney. Tell me everything. And it's my job to help you qualify for financing, get the best loan possible, not get your loan denied, but also not commit mortgage fraud.
Nice.
That's what I'm protecting you against doing mortgage fraud, but I'm also making sure that you get the best loan and you actually qualify and you actually close. So I would want to know that. Now, once we've established how comfortable you are with the process based on your experience, your time frame, your comfort monthly payment, and I know how much money you have allocated, well, that's enough information, enough data for me to start putting together some numbers. Hey, based on your down payment, your comfort monthly payment, where interest rates are, you would qualify for roughly this much home in terms of a sales price. The reason why I say roughly is because we don't qualify for a loan amount. We don't qualify for a sales price. And that's like a big misconception. People are like, well, how much of a loan do I qualify for? Or how big of a home do I qualify for? I'm like, well, it depends. Because you qualify based on your debt to income ratio. Well, certain homes come with certain stipulations. One house may be a condo and the condo association dues are $900 a month. That gets factored into your payment. One house may be in a rural area and it's $0 in homeowners association dues because there's no homeowners association in that rural area. And there's no condo dues because it's not a condo, it's a single family home. At which point you may qualify for a much greater sales price and a much greater loan amount because you don't have those other factors. You may fall in love with a house that has no HOA and it has low taxes, but it's in a freaking flood zone. And now flood insurance is going to be $1,000 a month. Well, that $1,000 a month gets factored into your debt to income ratio. So it depends. Most people don't really recognize this, but we qualify for the most part based on a debt to income ratio. VA loans, actually not the case. VA home loans, we qualify. DTI is a part of it, but residual income is the biggest, which is why a lot of times on a VA home loan, we can qualify a veteran or an active duty military with a super high debt to income ratio, but because they have a super high residual income. Residual income is, in my opinion, probably the better way to qualify. We're just not there yet as an industry that we're using residual income as the key qualification matrix, but residual income is essentially how much money do you have left over after you pay all your bills. That's what residual income is. So other things that you would find invasive when it comes to like qualifying for a home loan, I have to figure out how much money you make. Like I have to. And how you're paid is going to be factored into whether or not you qualify. If you are self-employed, please know, rule of thumb here, there's always exceptions, but rule of thumb, we must see that you've been self-employed for at least 2 years. If you're 100% commissioned, we have to see that you have worked in that profession for that employer for at least the past 2 years.
I just got the job. It's a fat paycheck. That's why I got it. But how can I show you?
Yeah. You're going to have to wait, or you have to go get a cosigner. Right? And those are things that so when I ask you like, hey, John, what do you do for a living? And you're like, oh, I work at XYZ company. Okay, that's not enough for me. Hey, John, how much do you make? Oh, I make 90 grand a year. That's not enough for me. Like, it's not. I cannot do my job well the way that you want me to do it, giving you sound advice, because again, my job is to make sure that you qualify, but you qualify for the best loan and that you actually close on time, right? In order to do so, I have to get into your business. Well, if you make 90 grand, is that hourly or is that salary? If you tell me it's 90 grand and it's all salary, you're the easiest borrower to qualify. Your income is as provable as they come. But if you tell me, well, it's 90 grand, but it was 90 grand last year because I got a $30,000 bonus. Oh, so really, John, your salary is 60 grand. Oh, well, yeah, your salary is 60 grand. Hey, John, how consistent is that bonus? Did you get it 2 years ago? Oh, no, I missed it the first time. Do you think you'll get it next year? Well, I don't know. Okay, I might not be able to use that $30,000. You want me knowing that up front. My job is never to tell anybody no. Most of us, mortgage sales professionals, mortgage brokers, loan officers, MLOs, we are 100% commissioned. We want to close as many loans as smoothly and as easily as possible. I promise you. Been doing this for 20 years. It hasn't changed. So we can make the most money, be the least stressed out, and work the least amount of hours. We get paid because shit goes sideways. We have a career because nothing is easy. Okay, we should celebrate that as professionals, but let the consumer know, hey, man, look, I don't want to have to dig this deep. I don't want to have to ask these questions. I hate opening Pandora's box to get one answer and 3 more issues pop up. Right? And that's what happens. Mm-hmm. It's like, hey, well, you already asked me for that. Why are you asking me for more? I'm like, well, I asked you for that one document, and when we got it and we reviewed it, there's more questions. I'll give you an example. Hey, I sent you my pay stub. Why do you need to see my tax return?
Yeah, what the hell?
Yeah. And I'm like, well, I saw something on your pay stub that shows that you could be an owner in the company, and if you own more than 25% of a company, now I have to get the business tax returns. Well, how come you didn't ask me that up front? I'm like, how come you didn't tell me up front that you own 25% of the business? You know, like these are some things. Like I've looked at someone's pay stub, and I noticed out of their pay stub, there's alimony. I'm like, well, I didn't know you're married. Like, wait, you're married? You have 3 kids? Yeah, but this is my second marriage. And this dude was having alimony deducted out of his paycheck. Well, when I qualify you for financing, I have to disclose if you're obligated to pay child support, separate maintenance, or alimony. Mm-hmm. And that alimony was a debt. And luckily, this dude made so much money, it didn't prevent him from qualifying. But I did have to have him actually pay off like a car that he owed like 11 grand on. And he had the money. But we had to get rid of like a $400 a month like car payment for his teenage kid. Because he was paying somebody alimony and it didn't come up in the initial. So like these are things that when I ask you, hey John, any chance you have to pay alimony, child support, separate maintenance? I'm not trying to get up in your business. What I'm trying to do is avoid what happened to me 13 years ago when I didn't ask the question because I made an assumption that this guy came into my office with his wife. They had their 3 kids, and it didn't dawn on me that he had been married before. Right. So we get into back on like the income aspect. I mean, we need these documents. We need to know this information because it matters. It matters. I'm
going to ask you a serious but jokingly question. Why do you need all pages of the bank statement, even the blank one?
Yeah, so that's a common, and we can tell you've been around the mortgage industry for the past 5 years. All right, here's the deal. If we, lenders, banks, receive a bank statement, and some of this stuff is going to become obsolete because we are going to be leveraging technology that lets our computer talk to your bank's computer and just give us the data that we need. Yeah. But, not everyone banks at a place that's that tech savvy. Not all borrowers are tech savvy. And that's okay because we serve all people. If you sent me a bank statement that was 1 of 7 pages and page 6 and page 7 were nothing more than disclosures or blank, which happens if you look at any one of your financial statements, I don't know that page 6 and page 7 were blank or were nothing more than disclosures. All I know is there's 7 pages and I have 5. What if page 6 and page 7 actually showed me that you withdrew all your money 2 days before the statement period ended, and you really don't have all the money in the bank.
That's why I don't want to show you, Dustin.
Or what if it was there that you had done a credit card advance and you had slid money in, and that's why you had the balance that you showed, but I can't use that because those aren't sourceable funds. So like things that are intrusive that lenders are going to do, like y'all should know this. We're going to ask you to document how you are paid. We're going to try to determine whether or not we have to get your tax returns and sometimes your business tax returns. And there's certain times you want us getting your business tax returns. If you are a business who depreciates assets, then the income that you're paying taxes on is actually way lower than the income that we can use to qualify you. So if you don't turn over your business tax returns, I can't see that you depreciated $100,000 in equipment. But that $100,000 depreciation write down, it lowered your taxable income, but I can add $100,000 back into your qualifying income. So those are things that we have to look for. And again, we have to look for it because our regulator demands it. Fannie, Freddie, HUD, VA, or whatever private investor we're going to sell your loan off to that's going to be backing this, they have rules and they have regulations. So again, we don't want to do this, but we have to do it in order to do our job, and you all want us doing our job.
Right.
These are some of the questions that lenders are going to ask you. Like, this is us getting all up in your business.
Right.
Here's some things that are popping up right now that we didn't have to deal with 10 years ago. Like, there's a new form of layaway. Are you familiar with it? Because I'm not that familiar with it.
No, if I see something I want, I buy it now. No need to wait.
Yeah, but like Amazon is giving people the opportunity to buy something, and instead of paying all the money today, they can pay like
What?
yes, yeah, like you can make it in installments.
I'm not aware of this program.
Yes, well, and nor was I. But when I talked to my friends that run underwriting departments at mortgage companies, they're like, yeah, this has been a big issue because we'll get somebody's bank statement to verify. Because, by the way, why do we have to get your bank statement? We have to verify that you have sufficient funds for down payment and closing costs. And in certain loans, it's do you have enough money for down payment, enough money for the closing costs, and do you have enough reserve assets? Like a buddy of mine's buying a $1.6 million house. In order to do his loan, we have to document he has enough money for down payment, closing costs, and he has to have 6 months of all of his payments left over because that's a big loan. We're taking a bigger risk on him. We need to make sure he has reserve assets. So we're documenting that. And it's not always just in checking and savings. Like, we can document it with investment money. We can document with 401k. We can document it with IRA. In his case, we're going to document it with IRA, but we can't use 100% of the IRA, only 80%. And why? Again, Dustin Owen didn't make that rule, right? Kevin, the underwriter, didn't make the rule. But whatever investor that we are partnering with to back this or to purchase this debt and turn it into a bond, that's their rule. So I have to know the rules, that I have to teach the rules to you, that I have to ask you to provide me documentation that allows us to play by the rules to get your loan approved, funded, so you can actually move into the house. Because nobody ever wanted a loan. Most people dream about owning their home free and clear. They dream about not having a mortgage. Nobody dreams about getting a mortgage, but getting a mortgage and the right mortgage and getting the right advice and closing on time is the most important step in the process. It tends to be a little bit invasive, but it's not at your, it's not to do something against you or do something to you. It's to do something for you. Right. We're trying to do this for you, and we're trying to avoid your loan getting denied. We're trying to avoid you having your closing get delayed, but we can only do so if you are forthright and open with the information. You answer all of our questions to the best of your ability. And this is me talking to you, the consumer, as well as if you don't know why we need something, ask us. Guys like me love to answer why. Hey, why do I know? Oh, here's why. It's required by Fannie Mae. It's required by Freddie Mac, because in 2008, when the financial collapse happened, we didn't ask for all of this. And we're trying to avoid that 2008 Great Recession from ever happening again.
So, Dustin,
yes.
I faxed you all the...
Why in the hell did you fax me?
Because I'm just making it... Because we handle all borrowers or something. So
okay.
I like my fax. I faxed you all of my paperwork. You have all 17 pages of my bank statement, as well as my tax returns. You have every piece of documentation you need to qualify me for a loan. Can I get my money tomorrow?
No.
How long?
It doesn't work that way. And by the way, I want a small caveat. We don't always need tax returns. Like, we need tax returns on certain borrowers.
Oh, really?
Yeah,
I
we
didn't
don't
know that.
Well, there was a time that we needed them on everyone. But if you're a W-2 wage earner and you don't have variable income, or you don't have multiple sources of income, or like you don't have what I call non-traditional income, alimony, child support, capital gains, dividend interest, like, and we're not using that to qualify. By the way, just because you have other income doesn't mean I have to use that income to qualify. Like, a really good lender's like, no, just give me enough to get you qualified, the easiest, and then we can move on. But that said, I joked with you about Fax Machine because most of us as lenders, we're pretty tech forward, and you can upload your documents securely into our system. You can scan it as a PDF and send it to us, preferably with some kind of encryption if it's your financial information. Fax machines still work. I mean, we got rid of our fax machine, but we still have an e-fax. So I have a fax number, but not a fax machine.
Right.
And then even like the documentation of assets and income and employment, a lot of employers and a lot of mortgage companies, if the consumer is savvy enough, we can even try to obtain that without you having to send me that information. Like, my machine can talk to the IRS's machine. My machine can talk to your employer's machine. My machine can talk to your bank's machine. And if the two machines can talk and you give us access to talk, then we may be able to pull the data that we need to get you qualified without. And that's the direction the industry is trying to go. We're not there yet. Too many times my machine talks to your machine, but your machine gives me the information, not the way that a mortgage lender needs it. Because why would Disney, who's a big employer in Orlando, why would Disney know how mortgage loan applications are formatted and how the regulations are written for income qualification? So I may get my machine and talk to your machine, and then I'm like, whoa, that data's out of whack. I'm pretty confident you do not make $60,000 an hour, but it came over as you make $60,000 an hour. I now need to get your pay stub. Okay. Same thing goes for your assets. Now, you may bank with a credit union who they're not tech forward, so my machine can't talk to their machine because they don't have one. Or my machine talks to Bank of America's machine, but we get the information, and what we see may be like, wait a minute, that doesn't make sense. Now I need to call you and get your bank statement. And you're going to be like, yo, D.O., but you told me you didn't need it. Well, now I am telling you I need it. Like, at the end of the day, my job is to get your loan closed. And I'm telling you we need to get your bank statement to get your loan closed. And if I get your bank statement and there's some things on there that we are trying to avoid being seen, we can't unsee it. Now I'm going to need not just your bank statement, John, but I need you to document where that $9,000 deposit came from. And that $9,000 deposit came from you selling a piece of DJ equipment, that I'm going to need you to show me where you own the DJ equipment. And I'm going to need to see a proof of sale and where the person who bought it from you gave you the check and you deposited the check.
I could see why.
Or we have to back that $9,000 out.
I could see why people would be like, bro, what the F, and just hang up. I could see.
Yeah, like they get mad at us. I'm like, man, don't kill the messenger. Like, you know what I would love to do? I would love to come to work at 10, leave at 4, work 4 days a week, make $300,000 a year, and just say yes to everybody. That's what I would love to do as a lender. The world just doesn't work that way. Not yet, at least. And when it tried to work that way, those years, 05, 06, 07, kaboom, 08 happened. We're trying to avoid that from happening. Therefore, we have the documentation. So to answer your question, John, and I'll find a way to put a big, but like you can see where I could go for hours talking to the consumer, the home buyers, the borrowers out there. Like I'm only scratching the surface of all the unique
angles and variables and wrinkles that go into
like, I mean, what happens when you're moving from New York to Florida, but your spouse is going to stay in New York while she closes out the school year, but she's confident that she's going to be able to get a teaching job in Florida because teaching jobs are widely available. Well, that's called trailing spouse income. And can you use it to qualify? Well, it depends. Well, then how do you document it? Like, you can see where, holy cow, hey, I had this awesome job to go be the CEO of Valencia College in Orlando, Florida, but I want to buy my house 30 days before I start working there. Can I do it? Well, it depends, but yes. But I'm going to need to document the shit out of it, right? You can't just give me an offer letter. It needs to be an offer letter that doesn't come with stipulations like a drug test or stipulations like a background check. It's like, no, this is a concrete offer letter, then I can do it. I mean, you get child support. You want to use child support to qualify?
Hell yeah.
Yeah, I need that. I might need that child support to qualify. Cool. I need you to prove to me that he has paid you every month on time, every time, the exact amount the court ordered.
What?
Huh? Like, yes, if like I don't get to make the rules,
Right.
these are things that we're going to have to do. Look, it may be 2 hours, it may be 12 hours of your life that you're going to have to round up, find, logistically organize all of this and get it over to me. And when you get it to me, it may be 90% of what I need, but I may need more after I review it. I'm not doing it to be a dick. I'm not doing it because I want to make your life hard or my life hard. I'm doing it because I want to help you become a homeowner, because homeowners are 70 times more wealthy than non-homeowners.
There it is.
That's what we're trying to do. Time frame, if you give me everything that I needed, I can get you pre-approved in hours. Hours. I'm damn good at what I do. I have technology I can leverage. I can calculate your income on the spot. I can structure a mock loan up. I can run it through automated underwriting. And as long as I have data integrity, that I can tell you, John, you are pre-approved. You are good to go. Now, you're going to go out shopping for a home, and let's say it takes you 3 days or 30 days to find and negotiate a contract. You're probably not closing for 10 to 30 days because you're going to want to do a thing like a home inspection. I'm more than likely going to need to do a home appraisal. The title company has to do title work. Like, they need to search to make sure there's no liens on the property. You don't want to buy a property that has liens on it. The seller's going to want time to move out. You're going to want time to move in, and your lender's going to need time to actually do your formal underwrite. And most lenders can go start to finish the quickest in about 10 days. Most good lenders, somewhere between 21 and 24 days. And then there's some that need more than 30 days. And there's some scenarios that need more than 30 days. But I can get you pre-approved once you give me what I need within hours. And once you're pre-approved, you can go out shopping. You can start making concrete offers. That seller or seller's agent can call someone like me and verify, hey, Dustin, you sent this pre-approval letter on behalf of Mr. and Mrs. Smith. Are they good? I'm like, hell yeah, they're good. They're good because I verified this, that, and the other thing. I asked all the tough questions. They answered all the tough questions, and they're ready to rock and roll. They're rock solid. Like, I can have that type of conversation. But when you actually get your money, it doesn't go to you, by the way.
Oh, shit.
No, the money goes to the title company or the closing attorney that's facilitating the transaction, and they disperse it to the people who need to get paid. But you're not going to just get a check and you're walking around town with a $400,000 or $500,000 check. It doesn't work that way. No, this is on the day of your closing or the day before, your lender's going to send a wire to the closing attorney or to the title company for the exact amount that's needed. So, and then from there, the title company or closing attorney will disperse the funds to anyone who is due money. People who are due money, the sellers due money. The seller's lender is due money because they're probably paying off the seller's mortgage, and the realtors probably want to get their commission. So there's definitely some people there's a survey company that probably did a survey, but they're going to get paid. Maybe that's when the appraiser gets paid. Like, there's people who get paid once the transaction actually settles. But to answer your question, you're looking at from when you go under contract to when you actually close or fund or escrow, depending on what state you're in and what region of the country you're in, you're looking at 10 to 30 days on average. But like, what if I'm waiting on a document from the IRS in order to qualify you? And what if the IRS cannot send it to me electronically? And what if you have to schedule an appointment with the IRS and go there in person, and their next appointment is 2 weeks away? Then I know I'm not closing you for at least the next 2 weeks,
Yeah.
And this happens. What if you are borrowing against your 401k in order to raise the funds needed for down payment and closing costs, which, by the way, your 401k is an amazing source for funds to close. You can borrow against your 401k. Most people can. Not all, but most can. But what if your 401k requires certain paperwork and certain processing timeframes, and that takes two weeks? Again, we as lenders can only operate as fast as everybody else. That's the home inspector. That's the appraiser. That's the IRS. That's your employer. I've had times when I'm trying to verify someone's employment as a smaller company, and the one person who's allowed to verify employment's on a 2-week vacation. Again, if we're trying to close in a week, we can't do that until he or she gets back from vacation and verifies your employment. And I didn't get to make the rules, but I have to follow them. So we talked about the IRS, your employer, your 401k money. I've had people who are transferring money from family overseas. There's a whole nother process. Not that you can't use money from your family in India to purchase your primary home here in Atlanta, Georgia, but there's documentation and paperwork and timeframes. and we all have to be able to working within that. So what I want realtors and the consumer to know is that we as lenders can only work as fast as everyone else can work in unison with us. And we have to trust that the document we requested is actually what you sent me. If I ask you, John, hey, John, I need you to send me your tax return, and you send me your W-2, a W-2 is not a tax return.
Oh, I didn't know that.
Or worse, I say, hey, John, can I see your W-2? And you send me your tax return. Okay, I didn't ask for your tax return, John. I asked for your W-2, and you're like, well, I can't find it. But, just look on page 1 of my tax return. It shows what my W-2 earnings was. I'm like, it does. But you know what, John? It doesn't show me. Was that 3 jobs or 1 job?
It was 1 job. I'm telling you now. Move forward with the process, please.
Yeah, can't do that. We have to document and verify. Document and verify. So, those are things where the consumer, and they don't know, and I don't need the consumer to know. They don't do that for a living. Just like I'm not a nurse for a living, or I'm not a high school principal for a living, or I'm not an engineer for a living. All the various professions that we support, I don't go in there and tell them how to bake that cake or how to write that citation or how to teach that lesson.
Or how to split that neutron.
Yeah, but I can tell them how to get their loan approved and what documents I need. And when I say I need X, please send me X. If you can't send me X, tell me you can't, and we can maybe talk together about some alternative documentation, whether it's Y or Z, because again, I am your advocate. This is probably a good place to kind of put a bow on it.
Yeah.
But it's a bow with a call to action, a little CTA.
Okay.
Home buyers, especially, but even real estate agents. Like, if you all are nervous or scared about the lending process, if you have questions, like, this is what I do for a living. This is what my TLOP team does. And we represent all home buyers. We represent the mortgage industry as a whole. We love what housing does for our economy. We love what real estate can do for home owners. We're on this platform creating this content to serve you, to serve your clients. And we are available to answer your questions. We're available to point you in the right direction, to get you aligned with great lenders in your market, aligned with good realtors in your market, or sometimes just answer a basic question and get you pointed in the right direction. So please know you're never bothering us when you reach out. On Instagram, we are at the Loan Officer Podcast. In person, right, like me as a human, first name Dustin, last name Owen, hit me up on LinkedIn. I'm probably the most followed Dustin Owen on LinkedIn, but I'm pretty accessible on LinkedIn. Instagram is a great way to get a hold of us. Obviously, the YouTube channel, which is the Loan Officer Podcast, aka TLOP on YouTube, phenomenal resource. But also, John and I have fun in the comments. So go in there, comment on one of the episodes, ask questions, and we'll do our best to offer commentary. And if you are a mortgage sales professional and you made it this far into this episode because you just dig what we do, if you haven't done so already, slide over to our website, tloponline.com. That's TLOPonline.com. It's there that you can sign up for the newsletter that I write each week and send out for free. It's there that you can see where we're going to be speaking in person live again. Coming up is going to be an event in Orlando, Florida. I believe it's the end of July, beginning of August. It's for the Florida Association of Mortgage Professionals. Shout out to FAMP, but all that information is found on the website. And more specifically, if you're at a point in your career where you need business coaching, you want sales training, and you dig the type of stuff that we do, and you feel like we could bring you an immense amount of value to you and your business, check out what we're doing at the TLOP MLO coaching community. Whew.
Good job, Dustin.
On that note, he is John Coleman. I'm Dustin Owen. If you dig what we do, sharing is caring. Make sure that you share this episode and the entire library of content that we've created with not 1, not 2, but 3 friends, family members, or colleagues. Until we meet again, that's all the time we have for you today, but we do look forward to catching you on the next episode.